G'day folks, Jim here from FX Charts, Monday the 22nd of September. Thanks for tuning in. Been a pretty extraordinary last couple of weeks with an awful lot going on, and the end result really being more dollar strength, US dollar strength, and that looks unlikely to change in any big way as we head into the coming week. There's not an awful lot of data out. There's plenty of secondary data. But really, the market's going to be focusing on Thursday and Friday when we get the US durable goods and the GDP. Until then, it could be a little bit choppy. But overall, the theme looks to be pretty much the same. Commodity block look to be under some pressure, although the Kiwis are a little bit higher this morning after the election. But commodities also look like they're going lower. So I think the Aussie and the Canada may stay under a bit of pressure. Anyway, we'll go and have a look at the charts. And starting with the euro, you can see from the daily chart that we've got here that the downside has been pretty relentless. Now that looks as though it could continue, but we are coming into some very strong support here. We've got the rising trend line off the lows, which I show you on the monthly chart here. So you can see that this low comes back into around about 2,000, possibly even a little bit before. So we're coming right back to that. And if we go back to the weeklies here, this low here, the previous time we got down here, 127.54, where it looked very heavy, but in fact bounced quite strongly. So while I think we are likely to see some dollar strength still, the euro is currently at just under 128.40. I'm looking for a move down to 127.50, but from then I think possibly a bit of a bounce. Not too much of a bounce. Probably not. We're probably not going to go over 130 again. But then I think we head for the next leg lower, and eventually I'm looking for down around 120, somewhere down around there. That's some way off. On the dailies, as you can see, we are becoming a little bit oversold. So down around this area here, looking to take profit. As I say, looking for a return to sort of around about this level here, the 50% pivot, which of the whole move up. That's down around 130. And then, as I say, we had the next leg lower. The 4-hourly charts, really, they're not telling us an awful lot. And as you can see, though, we are entering this support level. So for the next couple of days, while the short-term oscillators are pointing south, I think you can stay short, but I would be taking some profit down here and looking to resell into any strength. Moving forward to dollar yen. Now, dollar yen made it to a high of 109.45 on Friday, but it came back and it tried to take out this long-term resistance. So far, it's failed. Now, it's a holiday in Japan on Tuesday, and a lot of people are taking the long weekend, so it might stay reasonably stable today. Not a bad thing in my opinion, because the 4-hourly charts are pretty overbought, and they look as though they want to correct lower. And a day of stability would allow these charts to unwind a little bit. If we go further out though, and I probably need to go right out to the monthlies here and show you this resistance here. We tried to take this out, so far have failed. But if we can make further progress, then we're heading up really towards this 111, 112 area, where we're going to run into some pretty strong resistance up there. But ultimately, it's quite possible that if we take that out, we're heading all the way back up here to sort of the 123 highs, last seen in around, where we're at, 2007. Nearer home, the daily charts are also becoming overbought, as you can see on the indicators here. So I think this resistance here, which you can see, that might cap it for a couple of days. Could see a bit of a correction, but if we really saw it back under sort of 108, possibly to the previous high around 107.35, then I think it's probably a pretty good buy. I do think we're probably heading towards 110, but as I say, this resistance here is going to act as a bit of a hurdle. And once 110 is overcome, then this high here, 110.65, I think it is. So look for that to act as a resistance. Cable, that had a pretty strong run up ahead of the Scottish poll, and when the no vote looked as though it was going to come in, as it did. Cable topped out at 165.25. Didn't stay there very long and headed very quickly lower once again. We're now sort of sitting above support here, minor rising trend support around that's at 165, 163, well, 162.50, I should say. Cable's currently trying to rally a little bit. It's early Monday morning, but it's back up at 163.20, having closed at 162.90. So you can see that we're just squeezing a little bit higher. This is an hourly chart. So the 162.90, 162.50, that's going to support it. That's the 200-hour moving average. There's not an awful lot out of the UK this week, but eventually I think I don't think we're going to revisit these highs, but I do think we're possibly going to squeeze back up to 164, where I think it'll probably be a good sell, because I think the US dollar strength is here to stay. And although we might stop in the short term, because as I said to you just now, the euro's going to move into some strong support level. I think selling in the 164, 165 area for an eventual break lower is probably on the cards. But there's strong support down here. We got down to this 160.50 low middle of last week. That's when the yes vote came out as having 51% of the vote in the Scottish poll. Now the 100 week moving average, I should say, supported down here at 160.60. If we break that at any stage, then we're heading down below 160 to what that's 200 week moving average at 159.65. Now we're not going to see that yet, and I think for the time being that 160.5 area will stay intact, and it could well be that this 162.80 continues to support it in the short term. But where are we now? 163.20. A break of 162.8 to take us back down here to this 161.5 low, that one there, and then back down here to the 160.50, 60 area. A break of this area, which ties in with that 200-week moving average I just showed you. A break of that would then signal a fairly deep move down towards the 157.30 area, 61.8% of the rally. Up to 172, 171, 171.91, I think it was. But that's some way off, and I think for the time being, probably choppy trade while these daily charts look to unwind. Dollar Swiss has been pretty choppy, but having reached a high last week of some 94.30 odds, it came off quite heavily. I thought it was actually going to try and test this support line, but it turned around and finished the week back above 94. Now, the indicators, these are the 4-hour indicators, they don't look that convincing to me, so I'm not sure that we're going to see too much of a run higher today. But if and when this 94.30 level can be taken out, then we are going to squeeze up towards this high here, 94.55, I think that is, somewhere around there. And if we take that out, then we're going to head up towards these highs here. That's 95.40. This one's at 94.80, 75.80. And then I think if we can break away from this 0.618 retracement, which might not be all that easy to do in the short term, but then we're heading right back up here to sort of 95.75. In the short term, it could be that we've got some more choppy trade between the 50% FIBO pivot, which is at what, 92.70, and this top here at 94.30. But buying dips remains the game plan. The dailies are a little bit overbought. They could head higher, and we could see the dollar Swiss make a run towards this sort of 94.5, 95 area. But I'm not convinced. And if we do see it up there, possibly in the short term, look to take some profit. But the weeklies still look as though they've got plenty of upside momentum, and eventually it could be that we're moving right back up here to this 2013 high at around sort of 98.75. I think that's some way off yet, and we probably need some more consolidation before the dollar finds the legs to head up that much higher. The Aussie finished on a very weak note on Friday, down at 89.20. It's squeezing back a little bit higher this morning, 89.37 at the moment. Now there is some bullish divergence on the 4-hour chart, so maybe we might see a bit of a squeeze higher, and we could head back to, if we can take out this sort of 89, 50, 60 area, we could head back up to the sort of 90 figure area where there's going to be some decent sellers. Above there, 90 and a half, it doesn't look to me as though we're going too much higher at the moment. This squeeze up higher here to 91.10 last week, that could be seen, but it doesn't look likely to me for the time being. The dailies are definitely headed lower, so I still think that selling rallies is the way to go. Commodity prices look heavy. Gold looks very heavy. Iron ore is down at 5-year lows. So I think eventually the Aussie is going to come under pressure. Now, we had this head and shoulders that traded beautifully last week. Now, we've come down, more or less met the objective there. And we could, if we can go further, if we can break below 89.20, 88.60 is the next FIBO support. And below there, we're probably heading down towards this sort of, in choppy fashion, it should be said, but down to the January 2014 low at 86.60. So I think stay short and sell into rallies. But if we do see a bit of a turnaround in the US dollar in the next couple of weeks, or next couple of days, I should say, we may see a bit of a squeeze higher, but I don't think we're going too far. The Kiwi. Now the Kiwi's open with a small gap higher here. I should show you on the hourly charts, probably better. This is the small gap higher. That's due to the overwhelming, convincing election result for John Key on Saturday over the weekend. So Kiwi's a little bit more enthusiastic today. I don't think it's really going too high though, unless we do see a rebound in the Aussie. But this 81.70, 81.80 area, that should be good resistance for it on the day. The 4-hour, these are the 1-hour charts, so they're not telling us an awful lot. The 4-hour charts, like the Aussie, showing a bit of bullish divergence, but we're within the channel. And the top of there is at 82.15. I'd be a seller there with a stop loss if we got above this FIBO resistance at 82.50. I don't think we're going above there, and eventually I think the downside will resume, because I think the commodity currencies are going to stay under pressure, and that eventually we're going to come down here, have a look at this 80.40 level, and then below there we head below 80 cents. Now that's not going to happen for a little while. There's not an awful lot of data out this week. I think we've got the Kiwi trade data on Wednesday. That's about it. So it's going to be offshore developments. But the dailies are still pointing low, but they are suggesting that maybe we do need a bit of a breather. So I wouldn't be selling the house on it to go lower this week. But further out, the weeklies are pointing a bit lower. The stochastics, they're becoming a little bit oversold, so that kind of backs up the thought that maybe we are in for a bit of consolidation. So allow the market to do the work, but sell into strength and looking for lower levels further out. Now I'll just quickly go through the dollar index, which is at some very interesting levels. Now this is a weekly chart. The dailies are becoming a little bit overbought, but on the weeklies, as you can see, although the stochastics and the RSIs are overbought, the MACDs, the slower moving indicator, seems to have plenty of topside momentum. Now we are right at, as you can see here, we're at 84.77. Now this high here, going back to July 13, that was at 84.75. As you can see in the top corner, that was 84.75. So we're sitting on big resistance here, and it could be that the market needs to take a bit of a breather, and it may have a bit of a failure here. If it does, then we could come back to lower levels, down around sort of 84.25, maybe 84. I don't think we're going too much below there, but if wrong, we could see a bit of a squeeze back down to 83.70. Now, if we do break, if we can break this level here that we're looking at, then the next resistance comes at this confluence here, where we've got the 76.4% retracement of the whole move down from 89.60 to 72.70. And also we have weekly trend resistance starting back here in 2009. So that comes in roughly at about sort of 85.60. Now, if that gets taken out, then we're possibly heading up to. I need to go to the monthly chart here to look at this, but this is up at around 88.02. Let's just go to the monthly chart, and now, as you can see, this trend resistance that goes all the way back to 1985, which I guess is Plaza Accords time. So my memory doesn't serve me that well these days, but I think it was Plaza Accord. So if we get up to 80, sort of 87 and 3/4, 88, I would definitely be taking profit up there. The markets are becoming overbought, but as you can see on the indicators here, the monthlies do look as though they've crossed, and we could be headed higher. The RSIs and the stochastics are looking positive as well. So I think, although my view is that we may need some consolidation here, eventually we're going to see the dollar index a fair bit higher, and the US dollar trend is going to continue. So that's about it today anyway. As I say, the main focus of the week is going to be on the US data on Thursday and Friday. But importantly, Mario Draghi is going to be talking in Brussels later on today to the EU Governing Council. So be aware of what he has to say. He could allude to further easing in the EU, which is not going to help the euro, and that could push it sharply lower. But I don't think at this stage we're going below 127.50, as I said earlier. On Wednesday as well, we need to look out in Australia. We've got the RBA Governor Stevens who will be speaking, and he may do his bit to try and help the Aussie a little bit lower as well. That aside, the main event really will be the Japanese CPI, which comes out on Friday, and another weak number there could help to push the yen to lower levels. So that's about it for today. Have a very good one, and we'll talk to you later in the week. Bye.